Hi everyone, welcome back to this edition of RHO Market Chat. And as usual, this session is only for educational purposes only. There is no inducement to trade. And as usual, before we start, we recap on what we did at the last market chat. And today I will dwell on the topic of US dollar and why I am a long-term bearish on the US dollars. So this is the recap. Well, at the last market chat, when Bitcoin was trading about 14,000 or 15,000, I'm sorry, 15,464, I was clearly bullish on the Bitcoin, and I said that a mega bull run on Bitcoin is underway, or a mega multi-year bull run of Bitcoin is underway, and its immediate target will be to challenge its all-time high at 19,400. So I showed the similarity between the Bitcoin chart and the NASDAQ chart. And just like the NASDAQ, all right, Bitcoin had a tumble way back in 2017. And NASDAQ in the year 2000 had a big tumble after or during the dot-com bust. It formed two bottoms, like what we saw in Bitcoin. It formed two bottoms over 3 years period. And then a mega bull run followed. And this was the Bitcoin trade plan that I've shown, and it has worked like a clockwork. So at that point of, or that time of the chat, right, Bitcoin was trading about 15,464. And I said that if Bitcoin were to break the 16,000 mark convincingly, it is going to head to 19,500. And at 19,500, I said it's going to hit a huge resistance and it could pull back to 1,600. And if you have seen the price action of Bitcoin in the last week, you would have seen exactly what happened. All right, Bitcoin tried to challenge the all-time high at 19,400. It came very close there. It retreated back to 1,600 again, and during that retreat, a lot of bulls were, shaken. They're thinking that, perhaps we could see a 2017 correction of Bitcoin again, but nothing like that happened. It hit 16,000. It went back up to test the all-time high. So my target, all right, in the medium term, if Bitcoin is able to stay above its all-time high of 19,400, to stay, if it able to stay there and breach the 20,000 mark, the next level we could see will be 23,300. All right, so today I want to dwell on the topic of the US dollar and why I think that the US dollar will be bearish for a long time. So the first chart I want to be showing you, it's about the US economy, or the economy of the two biggest economic power in the world, China and US. And you could see that 40 years ago in 1980, China's share of the global GDP, it's only about 3%, and it has grown to about 18% today, and it has overtaken US, and it will continue to overtake US. And therefore, as the US share of the world's economy or the world's GDP strength, there will be less demand for the dollar, and therefore the dollar could be in a long-term bear. And the other point I want to talk about, or the other reason why I think that US is in a long-term bear, or US dollar is in a long-term bear, is because of the US national saving rates. All right, you could see in this chart, all right, that the US national savings rate measured by the sum of savings by business, household, and the government sector, adjusted for depreciation, declined 4.5% of the national income in first Q 2015 to a negative 0.9% in second Q year 2020, which is this year, and a negative 0.5% in the third Q of 2020. And with this savings rate, all right, it is bearish for the dollar as the US citizens save less. All right, so the other reason why I'm bearish on the US dollar is the ever rising share of the US debts in the world. All right, and as the debts of the US or as US debts continue to rise in the world, we see an ever falling US share of its output in the global economy. All right, so in the previous chart, I showed you that the US share of the world GDP has fallen as compared to China. And the other reason, like I said, that the debts of the US will continue to increase. And this time round, under the Biden presidency, it is going to be a lot more worse. And the reason is because in the Biden's campaign, right, he has promised a humongous stimulus that he's going to roll out during his term. And that amount to $11 trillion. All right. I mean, just think about $11 trillion, right? It is a massive, mind-boggling amount of money that is going to be printed during his term, right? And well, to recoup some of that, he has promised to tax about 4.3 trillion worth, but that is still a massive net 7 trillion worth of US dollar that is going to flood the world. And therefore, you know, what I would expect, all right, going forward with so much money printed is that the US inflation is expected to rise, and it is already rising, as you could see in this chart, that the US break-even broke, all right, to 12 months high amid reflation hope. And we are beginning to see commodity prices moving higher, all right, consumer prices going higher, food prices going higher. And therefore, you know, when that vaccine is rolled out and people start to get inoculated, and when the economy goes back to normal, there will be a bottleneck or a rush, all right, of demand globally for everything in the world, all right, from transportation to food, all right, to hospitality. And we would expect that bottleneck demand to cause the global inflation to shoot through the roof. And that will be another reason why I am very bearish on the dollar. And the current dollar trend, right, is showing that since 1970, the dollar and the commodity had a period of negative correlation between 1979 and 1987 and between 2003 and 2013. And what do I mean by negative correlation? Or what it means really is that when the dollar is up, all right, the commodity is down, and when the commodity is up, dollar is down. But in contrary, at present, the US dollar has got a weak correlation with commodity price, and hence today we should be looking at dollar and commodity market independently. All right, so the dollar is likely to continue to work its way lower over the coming years, and ultimately it could break, all right, the 88 to 89 area set in January 2018, and it could even fall all the way, all right, to 75.8 to 76. And let me show you how it looks like on the charts. All right, see, this is how I work out, all right, my macro outlook or macro technical outlook of the US dollars. So you could see that way back 40 years, all the way back to 40 years, the US dollar trend has always been the same, right? In the sense that it would run uptrend for 7 years, followed by a 10 years downtrend, followed by another 7 years of uptrend, and 10 years downtrend. All right. So in this chart, right, you could see that the US dollar started running up in the 80s or in the 70s. All right, all the way to 1985, and that's a 7-year bull run, followed by a protracted downtrend for 10 years. And then in 1985, when that downtrend ended, all right, a 7 years bull market, all right, for the dollar ensued, followed, and then it followed by another 10 years. And this is where we are now. All right, so the dollar was bottomed out, all right, somewhere in 2002, and he has been on an upward trend. And I believe, all right, we are in the midst of a multi-year downtrend that has just started. All right, so if you look at this technical picture, we are only in our first year of downtrend. And what is scary, all right, about this chart is that on the first 3 years of the dollar fall, right, it's always the steepest and the most scary. All right, and so I would expect the dollar, right, in 2021 to have a very, very steep fall as the US under the Biden presidency print a lot more money to revive the economy. So who will benefit, right, in a long-term bear market of the dollar? So certainly the emerging markets will welcome a weak dollar, especially when the emerging markets borrow a lot of money in the dollar. And also, just looking at the emerging market versus the MSCI World Index or the Developed Market Index chart, it seems to show, all right, that we are in a similar pattern like what we saw in 2016. And in 2016, we saw a head and shoulder pattern. And that was when the emerging markets performance against the developed market bottom, and it started rising. And this is what we are seeing, a similar pattern here, a head and shoulder pattern here. And, with the advent of a long-term dollar downtrend, we could see a similar movement now as the dollar go into a downtrend. All right, the emerging markets will start to outperform, all right, the developed markets. All right, and when we talk about emerging markets, China make a big part of the emerging markets, and now we are already seeing, right, a lot of funds, right, you can see here flowing into emerging market, even excluding China. All right, so why the US dollar is weak against the Chinese yen? All right, so as you could see here, right, that the Chinese FDI is going back to the pre-COVID level. So the latest Chinese, all right, FDI data, all right, is another indication there is no rush, all right, to ship production out of China, rather the reverse. All right, the China's utilized FDI have risen 3.9% year on year to the 115 billion in the first 10 months of 2020, followed by a 2.1 increase in 2019. And what is this all about? All this is reminding us that China, right, will remain as at the center of the world manufacturing, and this is exactly is actually what happened, all right, as we see the increase in the Chinese exports, all right, in the world. So Chinese share of annualized export, all right, let me show you this chart here. All right, so you look here, right, that the Chinese share of annualized world export has risen from a recent low of 12.9% in February 2019 to a record high of 14.2% in August. All right, and that is the reason why, all right, I believe that the Chinese renminbi will continue to be strong. All right, and although China was the first one that got the coronavirus, it was also the first one that climbed out of the coronavirus. And we are seeing China this year and also Taiwan being the first country that have turned positive in their GDP. All right, and therefore today we are seeing institutions and investors flocking to the Chinese markets, all right, to buy their bond, which has higher yield than the global bond markets. And therefore, all right, this is one reason that the demand of the renminbi will continue to increase. And the technical picture of the renminbi looks like this. All right, it has been on the bull run. You could see the renminbi strengthening against the US dollars, and I believe that it still has some way to go. Last done, all right, the renminbi to US dollar is 6.56. I believe that before we have a rebound, all right, we could see, all right, it going down to 6.14. All right, so I am bullish on the renminbi. I continue to long the renminbi against the dollar, and I believe that this will be a long-term trend. All right, so this is what I have for you in this episode. And if you're new to me, new to this episode, all right, and if you want to join my trading community, all right, where you could get the first-hand news of my market insights, my stock picks, actionable trading ideas. All right, please feel free to join. Go to my Facebook group. All right, join RHO Trading Community. Just go to Facebook, type RHO Trading Community, and you can find me there. All right, we have 4,000 people today on this Facebook group that just continue to grow leaps and bounds. All right, and if you want to be a part of my live chat group, this is a chat group that I talk to my students, my client live, all right, every day, all right, live sharing my market insights, my trading ideas. All right, if you want to be joining or be part of this live and very exciting chat group, all right, and I would easily say that this is the most exciting chat group you have in Singapore today. All right, so don't trade alone. All right, be a part of the community. All right, go to my blog www.robinhosmarttrade.com. Click join Robin's trading community, and you'll be on the way to be joining my Telegram group. All right, and if you want to get in touch with me, all right, this is my team. Write to me on the email, text me on my office handphones, all right, and we will get back right to you. All right, thank you very much, all right, for just joining me in this session. I hope to see you again. Stay safe and be profitable, okay? Bye-bye.